Well, hello, everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and unlike other shows that tend to do weeks in review where they look back in time at what's happened over the last week and give you some insights as to what's already happened, what we try and do here is I try and forecast by looking out into the future and showing you some stuff that you may want to watch out for into next week and where some opportunity may lie. Now, that isn't to say that we don't sometimes look back. What we tend to look back if there's some lesson to be learned there, or if I'm flat out just a little short on lessons to be learned in the week to come. Now, over the last week, we had quite a bit of news. The market was very erratic. I still managed to make out with a little bit of money, but not much. And as we go into next week, it's going to be interesting to see what happens because we've got Janet Yellen coming, I don't believe it's next week, but it's the week after that, which means we've kind of got like a kind of a dead week. And so it will be interesting to see if the market is light, if we see some of the erratic behavior that we saw last week continue because of a thin market, because of a scared or an off-put market. So those things are going to be very interesting to see come this week, I guess. But let's go ahead and just take a look at the chart here. Let me switch over and we'll take a look. Let's start with Aussie Yen. I'm just going to look at a few today, guys, and there is a pattern setting up here on Aussie Yen. It is a bat pattern that should complete at around the 886. So that pattern, for those of you who are new, who don't know much about patterns, this is what the pattern looks like. And we're going to stretch all the way up back here into this 886. Now, the nice thing about these bat patterns is the risk to reward is typically pretty good because we're going to look to short the 886 here. And then we're going to look for a retracement the other direction. So look for the market to come into this 886 to continue up this way. And if it comes up there, and if we touch that 886, then we're going to sell. Put your stops above the highs here. Okay, so find a place that you're comfortable with in terms of your risk above the highs and put your stop in place. And then look for a press back down the other direction. Now, I get a lot of questions about this because people say, well, Jason, why don't you just buy here if you think the market is going to go to the 886? Well, the fact is, I don't know if that's where the market's going to go. I have absolutely no idea. We could see the market turn around on a dime right here in the open, a gap lower and a run down, and we never get up to that 886. The market trading is about probabilities. All right, it's not about being right all the time. It's not about being right even a portion of the time. It's simply about dealing with probabilities. And there's two things that you need to know for probability. You need to know what is your risk to reward. So what do you stand to risk versus what do you stand to gain? And then secondly, how often are you right? And when you know those two components, you can make some guesses about what your profitability is going to look like over time. So, for example, if you've got something that's right 90% of the time, well, then you don't have to have a very good risk to reward profile to make that work. A one-to-one risk reward would be fine for that. 90% of the time you're going to be right. One-to-one risk reward, that's going to be pretty good. If, however, you're only right 30% of the time, well, now you're going to have to be willing to handle 70% of the time losses. So you're going to have to handle 7 out of every 10 trades being a loser. That means not only do you have to be a lot more disciplined with your trading, but you also have to be able to hold those positions, and you've got to have risk rewards that are 2, 3, 4, 5 times as much as your losses. So those are some things to think about. But when you know those two components, when you've done your back testing, when you've delivered it in real time and you know what that particular system will deliver in real-time trading, then you have some idea as to what your potential profitability is going to be. And so those are the two things that you really have to know before you start trading. And what it comes down to is simply about probabilities. So we know that if these things happen, if we see the ratios come in at these specific markers, and then we come into an 886, we know that there is roughly a 60 to 65% chance on the bat pattern that we are going to see a move down to our initial targets. Now, what does that mean? Well, as long as we have a little better than a one-to-one risk-reward profile, that means that this trade, it's going to make sense. So over time, we're going to make money. And so every single time we see a bat pattern, when we see the ratios delivered in just this way and we see the completion at the 886, we want to take that trade because we know statistically we're going to be right and it's going to make us money over time. It doesn't mean that this particular trade will be correct. It doesn't mean that the next 3 bat patterns that we trade will be profitable. That's not what it means. What it means is over time, the probabilities should give us a competitive advantage or what traders like to call an edge in the market. Now let's move on. Pound New Zealand. Pound New Zealand here has got a bit of a one-to-one measured move potentially setting up here. We just broke below, closed below here on Friday. And now we're looking for, I'm going to look for a continued press down into around 214.63s. The problem is with this one, guys, there's really no structure. What do I always say? Look left, structure leaves clues. Well, let me look left. There really isn't anything. There's no structure until we get all the way back here to 2009. Now, we do have some structure a little bit lower here. We have structure around 209s, but that's a bit of a ways down there, 210s. So we want to. One of the reasons I wanted to bring this up was to teach you a couple of things. Number one, pay attention to harmonics, pay attention to equal distant moves, and then look for the cooperation or the conjunction of equal distant moves, market harmonics with Fibonacci ratio analysis and structure. So if I bring in some Fibonacci's and I pull my Fibonacci extension tool out here, and I go swing high to swing low, and I try and build a little case for entry here, one of the things that you're going to notice is we come in right along a 1-4-1-4 extension. Now, this is a minor extension level. We would much rather see a 127 or even preferably a 1618 rather than the 1414. I can look for some ratio confluence in here by taking my Fibonacci retracement tool and bringing from the previous swing low here to the high, which is here. And if we want to stay congruent with it, we can come down here and bring it in here if we're going to ignore that spike. And you're going to see that we come right in near a 618 retracement. So if I want to look for a potential reversal in this zone, and I know this is going to be confusing for those of you who do not trade the way I trade or who are brand new to this style of trading, but just stick with me here. I know I've got the harmonic move that terminates here with my little blue line. I know just above that I have the 1414, and I know I have a 618 ratio confluence here just a little bit lower than that. So what I can do is I can bring in my little rectangle tool, and I can draw this out. Boom. A little zone between the 1414 and the 618 retracement, and I can say, all right, this is my kill zone. This is my potential reversal zone, as Carney would say. And what I'm going to watch for is any indication inside of this zone that the market may want to rally. So as we push down into this zone, I can either stay on my trading time or my higher time frame here, which is my daily time, and I can look for potentially maybe a double bottom in here. I could drop down from my daily time frame to an hourly time frame and look for some sort of bullish setup there, either a doji candle or a hanging man or something along those lines. Maybe I see a double bottom with bullish divergence or a 2618 trade that happens down on my hourly time frame that would give me some indication that the market was going to rally here. But this is most certainly an area that I might want to be watching into next week. Now, will we get there next week? I don't know. That's a long way for us to travel in 1 week, but I just wanted to do a little bit of analysis with you and show you not everything is perfect. And sometimes we have to just simply wait for additional confirmation, but we certainly want to know where the market is thinking about or where we could potentially see some additional, some movement or some reversal. One of the things that I always try and do is when I was in the Marines, we used to war game everything. And you got into the practice of always thinking to yourself, well, okay, I'm walking through the jungle or I'm walking through the desert and we're on a patrol, a simulated patrol, we're pretending, and we're training out in 29 Palms or out in Okinawa, Japan. And you start running through scenarios in your head. You start saying, well, what if we got ambushed from the right here? What would we do? Or what if we started taking mortar fire right now? What would be my play? Where am I going to go? What am I going to do? And you start what-ifing everything that you're doing in every situation, and your days really become this process of wargaming literally everything. And it extends into every part of your life. When you're going out to dinner, you're thinking to yourself, okay, well, if somebody just started shooting the place up right now, what would be my play? And you start wargaming all this stuff. Now, I know that sounds silly to some of you who weren't in the military or who haven't ever thought like that, but that was the way our mindset was, because literally all day, every day, that's all we did. Well, when we come into trading, I take that same mentality into trading. I'm constantly wargaming my trading, and I'm asking myself, okay, what happens if the market rallies right here? Do I have a play? What happens if the market comes down a little bit lower? Where can I possibly look for an opportunity to make money? One of the things I don't want, just like when I was in the desert or when I was in the jungle and I was out on patrol, I didn't want to be caught off guard. I didn't want to be in a situation where I didn't know how I was going to react. The same thing is true in my trading. I never want to put myself into a position in my trading where I don't know what I'm supposed to do. I don't ever want to be caught off guard. In the 12-week transformation, we teach it as OODA loop theory. So observe, orientate, decision, action. Okay, we teach IPDE: identify, predict, decide, execute. It's a neural loop that you can run through all day long in your trading that helps you stay ahead of the market, so that the market never catches you off guard. You're never in a position where you're like, oh, what do I do now? That never happens as long as you're running through these processes. So when we look at something like pound New Zealand, and we're seeing a nice long move followed by a nice long retracement, followed by what looks like another nice long move, the next thing we want to be thinking of is, where is this market going to terminate? Can I find a potential area where I might want to be paying attention? Now, certainly back up here, I don't want to be paying attention because there's nothing here. I don't want to be paying attention when the market comes all the way down in here, because that's not going to make any sense. But right here where we've identified, man, the market might have something there. And we also know if we dip just a little bit lower, down into about 208s, that we may have some additional structure down there. So a couple of areas to watch here on pound New Zealand. I hope I'm not going too fast for those of you guys who are new. The last one's pound Aussie. Pound Aussie has a potential cipher pattern. Now, this is a long way away right now, but we've had a move, a break of structure. We've come right down in and tapped that 127 extension. So now what we want to be looking for is a 786 retracement. And the cipher pattern looks something like this. High to low, back down in, and then we drop down again. Boom, that's the 127. We look for the rally back up into the 786. And what are we looking for here, guys? We're looking for the market to come into that 786 and then roll over. So come up and then roll over. Now, why not just buy here? Again, same question constantly comes up. Well, if you think the market's going to go to the 786, why don't you buy here at the 127 extension? Well, the answer to that question is, I don't know if the market's going to rally. I have no idea. All I can do is play the probabilities. And I don't know what the probability is if the market comes into a 127 that it's going to rally into the 786. I would imagine if I ever tested that, it would not be good. But because one of the things that makes these patterns so profitable is that they don't happen very often. What I mean is, in the grand scheme of movements, these specific ratio combinations that create the patterns that we trade do not happen all that frequently. So when they do happen, we can estimate the probability of being right. And so while I don't know what the probability is that we will rally from a 127 to a 786, I do know what the probability is that we can sell a 786 and make money. And we're going to make money 70 to 80% of the time. Very, very profitable pattern here, but only when traded correctly. So anyway, those are 3 trades that you guys can watch for next week. Like I said, we need a lot of big movement out of here, but with the market as thin as it is, you never know. So that's what I've got for you guys today. I hope this has been a valuable use of your time, and please subscribe to the show on YouTube, or you can always go over to, if you're watching this on tradeempowered.com, you can always go to the Learn to Trade section. I've got a ton of free training, so if any of this was confusing to you, you can always go over there, get a whole ton of training, and really get spun up. That will make this time that we spend together in the Forex market preview all the more valuable. And if you want to see me do this every single day, I do it every day. We have a war room every single morning for those of you who are interested, and you can join that for just $1. A whole month for just $1. Just go to the link right underneath this video, and it will take you right there. So until next time, guys, good luck, good trading. I'll talk to you real soon.